G'day folks, welcome back to another update for gold and silver. Now it's looking bullish at the moment with a fresh breakout on gold, and silver's already running long at the moment.
It's bullish time.
So yes, it's bullish time, and before going any further, make sure you hit that like and subscribe button to support the channel. Also reference the +1 videos to get a deeper dive into the trading strategies we talk about. In terms of the outlook, gold remains the go-to safe haven, still historically elevated after rallying through 2025. Its strength is supported by central bank reserve accumulation, global monetary easing, and relatively weak US dollar, and widespread geopolitical uncertainty. Silver's case is more nuanced. It benefits from gold's safe haven halo and from growing industrial demand, notably from green energy, solar, electronics. That dual use quality gives silver a potentially larger upside over the medium term, especially if industrial demand holds up. From a geopolitical and macro viewpoint, as long as global tensions, trade frictions and uncertainty monetary fiscal conditions persist, precious metals, especially gold, are likely to remain favoured. Silver adds a structural upside if industrial demand, energy transition, tech continues to grow, but also carries more risk if global growth slows or industrial demand weakens. Key risks for both metals: a stronger US dollar, renewed rate hikes, or easing geopolitical risk could reduce their appeal, especially for silver, which depends partly on industrial demand cycles. So looking at gold first, on the weekly chart, the price is well above the moving average. We've drawn a target range there, a potential retrace if it does retrace. That's because of this bearish divergence, lower highs on the CCI versus higher highs on the price, and that Fibonacci retrace is drawn according to our rules, going back to that significant low before that divergence started. That's at 23-38% Fibonacci range as a minimum. Sometimes it just touches that and bounces, other times it fluctuates in there and then decides which way to go, other times it falls right through. Now it hasn't reached that range yet, and of course it could fail to reach that range if this price continues to rise. But so long as this CCI continues to go on a downslope and that price keeps rising, we're going to have to readjust that Fibonacci range. On the daily, we've had this resistance up here at 43.80. You can see it's hit it a few times there in those few days. It's bounced lower. It would have been going short during this period and then started going long from that arrow there during that period. Now notice also the CCI is dropping, but there's no divergence currently. But notice how the CCI highs are lower there, and so is the price. Now if that price rises higher than that point there, that little range there will be a bearish divergence as well. I'll just keep an eye on that in the coming days. However, at the moment, the CCI is just a fresh breakout above the moving average, which is a positive if you want to go long. And you would have been going long from this period, but that's a fresh breakout from there as well. Now, what that looks like on the hourly. Now, as you can see here, we've got on the hourly chart, we've got a longer term bearish divergence, the same period on the price. And of course, this price could keep rising. But so long as this CCI keeps dropping and the price rises, we're going to consider that a bearish divergence. I'll draw a target for it now, but again, this price could keep rising. We'll take it back. Let's take it back to that significant low, and if the price retraced, we can expect a pullback somewhere in that range there. That's a 23-38% range. Now, I've probably drawn that target range a bit prematurely. I'm guessing that the price is probably going to rise further, possibly according to the daily. But we'll put that in there as a potential retrace. You never know with these charts, so one step at a time. Now, in terms of a back test, remember we're going long according to these arrows on the daily. You would have been going long during this period, short during that little period, and then going long again from that period. And here's the back test showing the results of that. And the way I like to trade this is when the moving averages are in an upswing. The CCI here is giving you a warning to potentially get out of any trades, but stay in the trade until you see the moving average range turn down like it did there, and you would have exited the trade on this one if you entered there with a little profit there. Avoid that little going short during that period and go long again when the CCI breaks higher, and so does the price. You would have gone long there and closing it out there. Again, avoid trading long or short during that downturn. Remember, we're only going long in all these this period. According to the daily, going long again from that point when the CCI and the price rise, and probably closing it out there as well. Closing it out, then going long from there. And where we are at the moment, as I said, you'd still be going long and taking these little trades. Each of these little bars indicate contracts open, and you would have made a nice little return on that one. So this is silver on the weekly, and you can see this has already done what I was talking about for gold. The price paused there, retraced, and it's actually hit the 23-38% target range with that wick on that candle. So that Fibonacci retrace is already executed and completed. We've marked that. But notice as well, we've got another little, you can probably extend that trend line, this longer trend line, you can probably extend that or use this smaller Fibonacci range. Now I'm probably going to extend that period. So we've got another bearish divergence here, and you would have drawn it from that point to that point versus the price. And again, taking it back to the previous level, going from that high down to that particular low. You can see there we've got another target range potentially on the weekly. So that could be another area of a retrace in the coming days or even weeks. Again, if that keeps rising and the CCI keeps dropping, we're going to just realign that Fibonacci. On the daily, you can see that it's broken through that resistance at 54.60, which means we're going to raise that resistance to that level there. But notice as well, we've got another bearish divergence. Previously, we had this range there to consider, but that was barely a bearish divergence. That was probably a double top there. But since then, the CCI has dropped further and the price has risen further. So that's also another bearish divergence. And on the daily, we'll draw another target range, assuming it pulls back from where it is at the moment. That's not much different to where it was before. Take it to that 23-38% range. And that's our new target, assuming it pulls back from there. Of course, this may likely break higher. The CCI is showing no sign of a pullback yet. Now, we also look at the 1 hour time frame to see if there's any micro moves. This is the 1 hour. And you can see there it's got a bit of a bearish, slight bearish candle, and the CCI has pulled back very slightly, but nothing to be concerned about yet. And there's no divergence. You could probably argue that's a double top almost on the CCI. And if that was the case, I still consider that a bearish divergence. It's probably slightly high, but it's probably close enough to be a double top. I'll mark that as a bearish divergence. And if that pulls back from where it is at the moment, let's take it back to, let's say back to that significant low. Then we're looking at a retrace, minimum retrace in that range there. So again, retrace on all three timelines for silver so far. Let's look at the back test. Now the back test again is going according to these daily arrows. So going long from this period. Again, you would have taken those long positions when the moving average is rising. Notice here you've got a bearish divergence on the CCI versus the price. We've drawn a target range there, and then eventually the moving average broke down. That's where you would have closed it out, taking your profits on that little range there with those trades. Avoid trading short. Remember, we're only going long according to the daily. Take a long position, closing it out, another little gain there. Avoid trading, going long there. Let it run, let it run, let it run. And you'll probably still be in a trade with those little trades taken there. If you'd like to get some share trading ideas, this is a portfolio we run on the Patreon page. These are all closed trades, and we started trading from the 21st of September this year. And in percentage terms, all these trades that have been closed now have returned at 13.26%. So not a bad little return in the number of days since September. So to get access to that Patreon scan, we do a scan each weekend. We just finished one yesterday. Links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next video.